Okay, I'm going to make quick video session of today's trading session in the S&P E-mini market using the process.com indicators. Now, the reason I'm doing this is because this implementation of using the indicators is easier to show than it is to describe after the fact. But primarily, we're going to be using the three oscillators here below the price panel. And these are the effort oscillator, which is a proxy for volume. Then there's a momentum oscillator with two momentum lines, a price momentum line and a trend momentum line. And then there's a short-term trend oscillator. Up on price, we're going to have the contraband indicator, which tells us when to take a contrarian trade. And then we're going to have the VWAP here, which is essential to our trading. Then there's these colored price bars of yellow, gray, and white, which indicate price cycles. And then there's these timing alert dots. So that's what we're going to use. But mainly it's this is to describe how to implement the readings of these indicators. Now, in addition to these primary indicators, over here we're going to use the 30-minute chart of the E-mini, and we have a color-coded volume bar here. So these color codes mean something in the process.com indicator scenario. We also have the 1 minute tick bar of the NYSE. Over here, we have, again, those volume bars, but mainly this is a support and resistance chart of the 1500, and that's what the main chart is of the 1500. Then there's the 4500 tick bar chart over here, and then there's the matrix. This is done in TradeStation. We're going to be simulating it. You can see down here that this is a simulated trade. So we're going to be simulating it so you can actually see the effect of taking the trades and everything and how to implement the strategy. Now, since it's going to be taking place over the trading day, or approximately maybe up until noon, something like that, then I'll just cut out the dead spots where there's no action, because all and really the objective is to show and describe the implementation strategy. So right now you can see here we're in the pre-market. This is around 9:15 right now. We're just waiting for the market to open. And the essence of this strategy is to get into these runs right here. Whether it's an up run or a down run. There's many other things you can do with the process.com indicators. You can take, again, contrarian trades. You can take discretionary trades. You can take trend trades, and those are all described over on process.com. But the main thing here is how to get into the trades with runs in them. So the first thing that we're looking at, even pre-market, is how are the indicators reading right now? Well, we see that the effort right now, pre-market here, right here, was essentially to push the market up, which it did, and then it waned, and then supply came in right at this area. And this area here is around 5 o'clock in the morning, and we see that the effort to continue to take the market up resumed right here. Now, we're just reading the indicators, and we're trying to set our expectations up, but that's a good exercise into reading the indicators prior to the market open, just because it gets your trading mentality into the right frame of mind prior to the market opening. So we have a timing alert dot here. This timing alert dot is to the downside, but the VWAP is to the upside. So as a trend trade, we wouldn't take that. And the things that indicate that price would be going to the upside is the effort oscillator here is, well, I really shouldn't call it an oscillator. It's more of an indicator, but you can see that it is to the upside. It's above the zero line. The momentum oscillator here, the significant points are when it cuts through, when the price momentum cuts through the trend momentum, and that's like right here. You can see it's going to the upside, and then we see price go up. And now there's some reason to suspect that it might be coming to the downside. One, because the price momentum is above the upper bound of the oscillator. It could potentially be coming down through the trend momentum, and you have a timing alert dot to the downside. However, the short-term trend is still blue and is still strong. We also see in this area here that there's a compressed volatility to it, because this oscillator, the short-term trend oscillator, also measures volatility. You can see the volatility was much wider over here at this time period, and now there's less volatility taking place. But even within that less volatility, the short-term trend is still to the upside, and it's strongly up towards the upper bound of the oscillator. Now I'll go ahead and demonstrate exactly what we're going to be doing this morning. When we see, we're going to be using the indicators to determine whether we think price is going to move up or it's going to move down. And we're trying to get in at those specific points. When we do that, the way that we're going to do that, let's say we determined right now that price was going to go down. Now, we could just as well determine that it was going to go up, but for demonstration's sake, we're going to assume that the price is going to go down. And so we would go over here and we would place our trade right here. We're just going to take one contract. We place our trade right here. Now, we wouldn't actually place it this far away. We would actually be placing it right near the fill point. But this is a demonstration. So we place it here. It would get hit. Now, when you're using it in the simulation mode that we are, as soon as it hits your order entry, it fills it. So it's like one tick away from the real-time trading. So you want to bear that in mind. But the idea is that we're going to place our trade, and then when it hits this in our direction, which we're taking a down trade, we're going to, if it goes 3 ticks above our entry, then we're going to place a buy stop right at our entry point, and when it comes back down, it'll fill it. Now, usually the way that it happens is the reason it'll come back down is because, as you can see, the price bounces back and forth, so that from 3 points away, the majority of the time it will come down and hit it. Likewise, when the price goes in our favor and it goes to 4 ticks away from our price point, we're going to put a buy order in here. So it would be going in, and then if it comes back, it will take us out of the trade. So the idea here is that if it goes against us, yes, we're going to place our, again, if it goes 3 ticks against us, we're going to place our stop at our entry point and we'll get closed out. If it goes 4 ticks for us, then we're going to place our stop at our entry point and potentially get stopped out again. So in this scenario, most of the time it will go in your direction with you, and a number of times you will get stopped out because of the volatility of it. So you have to keep applying this trade. So in this implementation strategy, which is more of a trend type following strategy, you are going to have a lower percentage success rate of trades, but a larger percentage of gains. And you're going to have your lower percentage of success rate in trades simply because you're going to get stopped out a number of times before you get into a trend. So that's the idea. Let me cancel this out here. That's the idea. That's how we're going to do it. And like I say, we'll demonstrate it with the live action here, and I'll cut out the dead spots in the video, and we'll see how the implementation takes place. The reason I don't do it pre-market is because the volatility really isn't the same as it is during the market hours. There's much more participation during the regular market hours, and the price fluctuates a lot faster. Now, when we look at the indicators over here on the 30-minute indicator, we have the magenta bars here, which usually mean that price is going to move up, and we saw that it did. Here's where the first magenta bar and the second magenta bar, and we see that price did indeed move up, but we don't see any over here. So this is another indicator, and we're not expecting necessarily that the up move is going to be necessarily strong, if it is an up move at all. At least that's our interpretation right now. We're also looking at the 45-minute chart, or 4500 tick bar chart, for the timing alert dots, which give us an indication of direction as well. Okay, the market opened, the regular session started here, and right now we see that the effort is to the upside for price. The momentum is to the upside, but it is above the upper bound of the oscillator. However, the trend momentum is also above the upper bound, which is a stronger indication to the upside, as well as the short-term trend over here. Here we see a magenta bar over here. This magenta bar would be associated with this price bar, and it's to the upside. Here's a magenta bar on the effort, which would be to the upside. So we're looking to see how price might turn out here so we can implement the strategy. Here's a white bar that shows that it could be the end of an up move, or a down move can be coming. Here's cutting down through. We have a white bar here. So let's go ahead and take a short trade here. You can see here's the implementation right here. Let's see if it gets filled. potentially. Let's just.
Order filled.
Okay, so the order is filled. And so that was to the downside. So I just put in a sell order to the upside because it hit our 4 points. Now, so we could take the $50 here, but we're trying to get into a run here if it gets into a run. And now we just wait. Okay, so you can see that we just got stopped out. And that's what's going to happen oftentimes. So you gave back your $50 or whatever. It still looks to the downside. So now we'll see how far this goes to the upside, and we could take it again. But at any rate, that's the process. So I'm going to step away for a minute here, and I'll be right back. Okay, so now what we're trying to do is we're trying to determine now, because it's right at the VWAP here, the VWAP is still to the upside, the effort is still to the upside, the gray bars came in which indicate weakness, and they're down basically to the 0 line, and now we're trying to determine, does that indicate a pullback, or does that indicate a weakness and a potential change in direction? We have the momentum indicator here. The price momentum, which is this tricolored line, is close to the bottom of the oscillator. So we're not going to take a trade to the downside, even though we have a alert dot here to go to the downside. We're going to go ahead and let this oscillator come over and make this type of configuration where it goes below the lower bound and then turns green and starts heading up. At the same time, we're going to be watching our short-term trend here to see what it's doing. And again, over here, we have a magenta volume bar, which would be associated with the next bar. So we're looking for this down move to exhaust itself, and then for demand to step in, but it won't step in until this down move exhausts itself. So we're looking for the end of this down move right here. And we're seeing that we actually could, on a discretionary trade, go to the downtrend right here. We would have liked to have done it back here where we originally did, because now the effort is to the downside. We see right here a little red to the showing supply coming in. It's below the 0 line, and we have the momentum. Both the trend momentum is heading down, angled down, and the price momentum now is gone below the oscillator, but we're still looking to see if that is going to go up. So we'll see. Maybe the downside trend would be the better play. We're just going to have to determine that. As a matter of fact, just to show the process, let's just go ahead and do that again. We'll take okay, we went to the downside here. Now, if it goes 3 ticks against us, we're going to place our order in, or if it goes with us 4, then we're going to place our buy stop right here. So let's just see where we have to place it and see how this process works. Now we have a yellow VWAP, we mean is going to the upside, and we have a timing alert dot. So we place our buy order in right here. Again, that's why you're going to have a lot of, you can see right now, this shows 681 to the negative side, but that's incorrect. That's because I was fooling around with some other stuff last night, and so I don't have a clean reset this morning. But we're like we took 2 trades and it stopped us out where we wanted to, and so we're about $4 to the negative side with 2 minus trades. Okay, so now we see it's going up, so we'll take a long trade right here. And again, now we'll do the opposite. So, okay, so we put our sell order in right here because it went up 50, or it went up 4 ticks. And clearly, you could take your profits here, but the idea, again, is we want to get into the run, and over here we're expecting more of a run to the upside simply because of this magenta bar over here. That's why, you know, you could be giving back $100 or $75 or whatever as it comes back down and hits this, or now you're up to 112 or whatever. If it goes up to the contrarian line here, then we're going to have to think of our situation again, because we're looking to see where it might close out at. But that's the process anyway, so I'll close this video out pretty quick here, and because you've seen the process, and that's what it's all about. You can see it's pulled back here. Now we have a timing alert dot to the downside, but the effort here is showing to the upside. The short-term trend is above the upper bound. We do have a magenta bar here, which is good. And on the 45, we have a timing alert dot to the upside. So we're going to go ahead and let it play out, even though we have now got 2 timing alert dots to the downside. Now, this is the way, especially early in the morning, it might go, because not until about 10:30 or 11 o'clock will it really decide which way it wants the majority of the day to go. We might be getting in here, but if it comes down to the VWAP, which also acts as support and resistance, and you know, all these indicators are described over on processtrading.com. If it comes down to resistance, then clearly we'll get stopped out again, and it'll just be another $2 negative amount in our trades. But the whole idea here is you have to look at the indicators to tell you which direction that you think you want to take your trade in, and then let the trend take place. Here we see the effort bars increasing. So that's another sign that it could be going up. Again, we have the trend. That's this dotted line. The trend momentum is high in the upper half of the oscillator. And short-term trend is still quite high in the oscillator. So we're going to let it run for a while. Okay, so I'm just going to close this video out now. So you see the process. That's how it works. This is getting into trends. It's a trend trading type of system. And it's just another aspect of the processtrading.com indicators. So hope you enjoyed the video. If you like it, subscribe. And if you have any questions, you can go over to processtrading.com, use the contact form at the bottom of the page to ask any questions or comments. If you have a comment, just leave it below in the video or whatever. So that's it for this particular one. You can see how the magenta here was associated with this bar. It told you of the uptrend, and here you see that uptrend taking place. So again, I'm just going to close this out now, but you see how it went. If I do get up to the contrarian line, then I'll think seriously of closing out the trade and then catching the next indication of which way it's going to go. So that's it for today. See you in the next video.